traders around the world, welcome back to another video. Today this weekend I couldn't produce a review. I didn't produce a forecast because I don't like what price is doing. At the same time, I want the Iran and US news to kind of die off, so I'm kind of watching price. I'm not engaging in any form of pair, but I feel like I want to do this video to help a few people that are struggling with trading, with a simple strategy that you can apply to help your trading. Okay, so this is not a forecast video, it's just a simple strategy to help you forecast price direction. Okay, hopefully you find this helpful, and if you do like it, just hit me up in the comment section, and then I will do more of this. Okay, right. So I know most new traders, mostly traders, get focused on the lower time frames, especially the 5, 15, 30, 1 hour and 4 hour, and they spend less time on the daily, weekly and monthly. I want to counsel you to spend more time on these time frames, because if you do spend time on these time frames, you will see that most of your trade will be going your way. Okay, once you understand these time frames, then the lower time frames will be very easy, because the lower time frames are always trying to go in the direction of the higher time frame. Regardless of what they are doing, it's always going in the direction of the higher time frame. Okay, so the little technique I want to show is just using the daily time frame. So what you want to do is you're looking for a pattern on price. Okay, so you're looking for a swing high or a swing low, and this is a crude depiction of a swing high. So you have the market placing in a swing high. Right, that's a swing high, and this is a swing low. Okay, so that's a swing low. Yeah, so that's a swing low and that's a swing high. Alright, so what you're looking for in price on the daily is you're watching price to see when the daily forms a swing high or a swing low. Alright, when it forms a swing high, what you need to do is to wait for the next candle, which is the fourth candle, to open and trade below the last of the swing. So if it's a swing high, the last candle of the swing. If it's a swing high, this candle here, you want to see price trade below that. Yeah, so you want to see price trade below this candle. Okay, and if it's a swing low, the opposite, you want to see price, oops, okay, it's not helping, let's clone it. Right, if it's a swing low, you want to see price go above the last candle in the swing low, which is this one. So if it's a swing high, it's that one. If it's a swing low, it's that one. Yeah, okay. So once you identify the swing high and you wait for this candle to just not close but trade, so during the day you see that the candle open and then trade below this candle's low. Okay, so if it's a wick, if there is a wick, wait for this day to trade below that wick, and then once that happens, what I want you to do is to go and find your swing low in the same time frame, which is the daily. Find the swing low that led price up to form a swing high. Okay, so let's say for example this is a swing low, this is a swing low that took price up. So I'm gonna draw a few of these boxes. Okay, so let's say this is what price did. Okay, there it is. So this is what price did, formed a swing low and then went up and then formed a swing high. So once this swing high is formed, okay, and then the fourth candle is traded below, right, this is what you're looking for. As soon as you get this pattern, what you need to do is pull up a Fibonacci. Yeah, we all know what a Fibonacci is. If you don't know what a Fibonacci is, then I think you need to go back and start learning Forex again, because everybody knows what a Fibonacci is. Okay, this is a Fibonacci tool. So pull a Fibonacci from this high, the swing high, to the swing low, right? So this is what you're gonna do. As soon as this candle trades below that, pull the Fibonacci tool and put the 0% at the high and the 100% or the 1 at the low. Okay, and what you're gonna do is, as soon as we trade below this candle, you are going to go short. Okay, you are going to go short and you place your stop above this day's high. This day's high. Okay, you're gonna place your stop here. So let's make this color red. Let's make it bigger. Okay, you're gonna place your stop above this high, right? And you're gonna target. Now you're not gonna get greedy with this, because it's a simple strategy and it works all the time. Okay, I'm gonna show you examples of it. It works all the time, and you're gonna target the 50%. That's it. You're not going to target anything else. You're going to target the 50%. So if, for example, this forms even higher like that, okay, let's bring it up, because sometimes price does give you that kind of movement. Okay, there. So even if you get this, okay, it's still the same. You are still gonna target the 50%. Oops. There. Okay, so you are still gonna target this 50%. Let me delete this. and change this color to green. There it is. So you take a short here. As soon as we trade below, we place a wick. So you can see that there is a wick there. There's a wick. Yeah, there it is. So as soon as we trade below this wick, right, immediately, sometimes price will give a pullback. If you're sitting in front of the screen, that'll be perfect. Just set an alert as soon as you get the alert that we've traded below this low. Okay, prices will sometimes give a pullback. Okay, if it does, that would be great. If it doesn't, no problem. Just go short and place your stop above the this day high, and then you target the 50%. That's it. That's all you got to do. Nothing else, nothing more. If you do this on 2 or 3 pairs a week, if they form during the week, you find yourself making more pips than trying to use any type of indicator, because I don't have faith in indicators. So I personally don't trade with indicators. But if you use this strategy, trust me, you will find good trades, few stop losses, and it's very simple. I know it's simple, but sometimes simple is very good. Alright, so this is just the strategy. So I'm going to go onto the chart and then show you examples of it. So let's clear all the drawings and then come in here. So this is the example. Okay, we have the swing high. Right, this is the New Zealand CAD pair. We have a swing high, 1, 2, 3. Okay, as soon as this candle trades below here, right, so I'm gonna place a line there. Okay, as soon as we trade below it, you pull your Fibonacci and you find your swing low, put to the swing high, and then you draw a line at the 50%, which is here. Okay, and draw the line back there. So that's the low we need to break. Yeah, so once we break it, your target is there, right? So I'm gonna drop down, because you're using the daily time frame for this. You're not using the 4 hour, you're not using the 1 hour, you're using the daily. So I'm gonna drop down into the lower time frame and then show you what actually transpires. Let me go back to the daily and place the line very well, right there, and now drop back to the 1 hour. Okay, so that's the daily low, this low here. Yeah, that is that daily low, right? You zoom in so you can see right there. Okay, so as soon as we trade below it, okay, that's why we traded below it. Notice price never came back up and it went straight down to the 50%, which is this line here. So let's see how many pips you could have made if you trade as soon as we break here. That's a short, sorry. It's a short position there. Alright, I'm gonna place my stop here for now because there's no actual wick on that daily, and your target is right there. Okay, so that's a almost 1.5 to 1. That's a decent trade that you can make with low risk and high probability. Yeah, this works on every pair. You can try it, you can test it on every pair, and you're going to be surprised how many times it will work. All right, so that's just one example. I can go in and show you lots of examples. Let's actually go back to the daily and see if we can find examples of it. Right here, that's another example. Yeah, and let's get rid of that there, and let's use this as an example. Okay, we form a swing high here, right, and we have our swing low placed in there. So we are looking at this low giving up, right, and then our Fibonacci and targeting 50%, which is right here. So I'm going to get rid of the fib and drop down to the 1 hour. I'm going to notice the date, which is the 19th of November. So I'm going to go back to the 19th of November. Is it 19th? Let's go back to daily. Okay, there. Sorry, it's the 5th of November, yeah, 2019. So just drop back in and zoom in. So we are looking at the 5th of November, which is this day. So that is the low. Yeah. On the next day, which is the 6th, price broke down right there, and granted this time it went straight to the 50%. So how many pips is that? Let's have a look. Again, stop there. That's a 1-to-1. Not bad. How many, what drawdown would you have got on this? 0, because it went straight down. As soon as we broke, it went straight down to the 50%. Yeah, so that's another example. Let me go on to a good one, which is this pair, gold, because I kind of felt gold has such a potential, right? So let's look at gold and see what gold did, because gold is looking like it wants to give a good swing to the downside, which I predicted. After going above this high, we want it to come back down. Okay, so let's put the Fibonacci right here. Now I know we have a lower high, a higher, sorry, we have a high here, a high, and a lower high, which forms a swing. And this time we broke this and went all the way up before coming down. So you would have taken a loss, but again, you will take a loss, but you have more wins than losses. Okay, it's not guaranteed they're going to be 100% all the time. No, that's not happening, and that's never in trading. In trading, you never get 100%. It doesn't exist. Okay, whoever tells you you're gonna be 100% they are just telling you lies. All right, so yeah, gold did something similar. Okay, as soon as we traded down here, went all the way up and came back down, and granted it went straight to the 50%. Yeah, that is what you're looking for. Hit the 50% and then you're done. Okay, let's look at another example. So this works on all pairs. That's another example. Here we have 1, 2, 3. Yeah, you can see I placed the trade on this because I still have my short idea still on there. Let's get rid of that and then show you what happened. So let's get rid of everything and show you what happened. So we have 1, 2, 3. This day we broke that candle, we broke it to the downside. So what do? I place my Fibonacci from the low to the high. Okay, and what am I targeting there? 50%. So let's go into the lower time frame and look what happened right here. There, as soon as we broke this low, okay, give a tiny little pullbacks, but nothing to worry because it's not going to stop you out. So you can plan some kind of model. Okay, let's say you want to short it with 20 pips every time you see this pattern. Okay, so that can be a trading plan you can add to it. So let's say 20 pips as your normal stop loss on every time you see this, and you target 50%. Yeah, there. So 20 pips stop loss. As soon as we break this, you take a short and you target that. That gives you 1.2 to 1, risk free, small tiny little drawdown, and it went straight to your target. Trade done. You move on to the next pair that you're gonna find this setup. So let's have a look at oil and go on to the daily time frame, and let's see what happens with oil. So we have 1, 2, 3, and then on this day, let me draw the 50% first, which is the green one. There. Get rid of that, and let's draw a line there. Okay, so there we have it. We went below that one. Let's drop down to the 1 hour and see what happened. So price went up before coming down to break it, right? So you don't take a trade until this low is broken, and we broke it right there. Okay, so you're gonna use your 20 pip rule. Short 20 pips. If, as a matter of fact, oil deals with point, so gonna do 20 points. Okay, so we go short here with a stop somewhere there. Okay, I'm not giving you exactly what you need to do, but this is a trade idea you can use because it's very effective. It happens all the time, like you can see. When it's there, it's there. Okay, so you have to frame some kind of trading plan around it. Okay, in regards to risk to reward, so your reward is always from this low to the 50%, but your risk, you have to define it yourself. Usually what I will do is I'll find the last swing high. That's mostly what I do. Okay, I'll find the last swing high prior to price breaking this, and I'll place my stop there. So if you want to use it, that's entirely up to you. Sometimes you might not be happy with the risk to reward, simply because your risk will be high due to where the swing high will form, but it works for me, so you can use it if you want. So I prefer using the last swing high prior to price breaking this low here. So if that's the case, then the stop goes here, and then your target is the 50%, and as you can see, boom, drops there, easily done, you move on. Okay, so for example, let's see what we have on the daily. Let's say we have 1, 2, and today's candle goes all the way up, then we have a swing formed. All right, so what we're gonna do is, let's say today candle goes as high as there. On Wednesday's trading, you just want price to break above this high, and as soon as it does that, okay, you place your Fibonacci from this high to that low, like that. Okay, and then your target is 50%. Yeah, so wherever the this candle will form the high, you are waiting for the next day's candle to just go above it. So when the candle opens, the daily candle opens, and it's going above it, just drop down to the 1 hour. Just drop down to the 1 hour, and then you see that the candle will go above it. It doesn't have to close, just go above it, and then you go long, and you draw your line at the 50% like this. Okay, and you just wait for price to rally to your target, and your stop goes below the last swing low formed prior to breaking that that daily high. Okay, and that's it. That's all it is. You don't add anything, you don't add any indicator, you don't add nothing to it. Just simple rule-based price action. Right, so let me do 2 more examples, and then I'll leave the rest up to you to kind of play around with it. Okay, so let's look for examples. Again, choosing a pair to trade, that's entirely up to you. So you have to find a pair, because there's lots of them, and it works on everything. So actually, let me just use corn, not corn, anything. Okay, I'm gonna use something that I'm not used to. Okay, let's use this. Right, and let's find a swing high and a swing low, like here. Yeah, here. So we have a swing high and a swing low. Okay, so we have this being lower than that, and then on this day we go above this high. So I'm gonna draw a line there to indicate that we went above it. Okay, and then I'll draw my Fibonacci from there to there, and then I'll draw a line here. Okay, that will be the target, right? And then I'll drop down to the 1 hour time frame. So I'm gonna find a date, which is 15th November. Then I'll drop down to the 1 hour. I'm going to find 15th November. Okay, and as you can see, we went exactly above it here. So your stop goes where? Below this swing low, and your target is there. So look for the long here, stop there, target there, boom, done. Simple. Yeah, on a pair that I've never even looked at. I don't know what it is, but there it is. So let's look at one more example, and then that will be it for now. I'm typing in a D. Let's find this one. I have no idea what it is, so let's go into the daily, and I think I like between this swing high and that swing low. Actually, there. Yeah, let's use this high and that low as an example. So we have 1, 2, 3, and then this day we break it right there. Okay, we break it right there. So I'm gonna pull the Fibonacci. I know someone will say, what about this swing, this low here? It's just an example, so just pretend this is not there. Okay, pretend this is not there. I'm using this high to that low, and let's draw the Fibonacci to get our 50% right there, and then I'll delete that. Okay, and what I'll do is now I'll go into the lower time frame and find 27th November. 27th November is 27th. This is 27th November, so we break it on this day. Okay, we break it on this day. So once we break it, we go short. Your stop goes above this high. Wrong two, and it's a wrong two again. Short. Your stop goes above this high, and your target is right there, almost 2 to 1. Bang, that's it, you're done. Yeah, that's all it is. You can use this on any pair, and you'll be surprised the kind of precision you get. Right, so hopefully you find this video very helpful. Let me know in the comment section if you like it, and I'll give you more tips in future. Okay, I kind of did this because I couldn't do the forecast for this week because I want to just weigh out the Iran and the US tension that's going on. Then maybe after that I can clearly see what price wants to do. Okay, but nevertheless, just keep following this page, because when I sit down in front of the chart and something pops up, I can do quickly some trade idea and then leave it here, because I cannot record it and put it on YouTube. Okay, because I do have this trade that I kind of found and it's already playing out. Okay, and then that trade gone, and that too is going up. So if you follow this page, you might find some trade that I don't post on YouTube or on the Facebook page. Okay, so hopefully you like this video, and share it and subscribe to my channel for more of these videos. Okay, until then, take care, and I'll see you in the next video.